Good morning. You're watching Ask BQ, a show where we'll take all your stock market related questions and get our experts to answer them for you. I'm Smriti Chaudhary, and with me is Alex Matthew. Before we begin, I'd like to remind you can send in all your questions through any of our social media channels or through the YouTube live chat. You can also send in your questions through the WhatsApp number that's on your screen right now. I'd like to introduce you to our guests for today. We have with us Mr. A.K. Prabhakar, Head Research, IDBI Capital, Markets and Securities, and Mr. Gaurav Bissa, Vice President, Incred Equities. Welcome and thank you for joining us. Now, before we begin, we have a segment called BQ Focus. Alex, what is the topic that we're discussing today? What's in focus?
Well, clearly, Reliance Industries is the stock of the day, arguably, with the benchmark Nifty 50 now trading at above 19,100. And the Reliance Industries contributing the most to that gain, up as much as 2%. Of course, the headline numbers were in line with expectations. So I'm very curious about what our experts have to say about Reliance Industries and the outlook going forward. So, Mr. Prabhakar, without further ado, first of all, good morning from my end as well. What did you think about the Reliance results? Were they in line with your expectations? And would you say, based on what we know and based on the kind of picture that we're seeing, particularly in the retail segment, that now is an opportunity to buy because the prices have come off from the high point of the year so far?
Yeah, good morning. Now, the expectation for Reliance was not too great. So, now when they meet the street expectation, it was a mild positive surprise. So, Reliance has been an underperformer, and there were few talks about 3 board directors from their family, and so that is something where it is behind. So that approval also has come, which has made things positive for Reliance. But I don't see a major upside from here. But any rally, 5 to 7% is also very good for a large stock like Reliance.
No, but would you say that it's a buy at this point, and those that are holding positions can add to their positions on every dip?
For me, Reliance is a very complicated company. Too many business for us to understand. Now, when one business does good, the other business becomes a dragon. So for me, it is a very complicated business. I like to invest in business which is very simple for people to understand.
Fair point. Gaurav Bissa is also joining us. Gaurav, good morning to you. And on the charts, how does it look? It's looking particularly good today and certainly adding to quite a bit of an up move for the benchmark. And we're at the high point, if I'm not mistaken, for the benchmark index as well. But specifically on Reliance Industries, what's the outlook on the charts?
Good morning. Thank you for inviting on the show. See, if you look at the Reliance Industries, it's forming a falling wedge pattern. And the breakout, the stock is on the verge of a breakout. And if we are to close above levels of 2340, 2335, then probably we'll have another set of upside which can take it towards the level of 2380, 2400. That can push Nifty index as well. So for time being, it has bounced back from the wedge support area. But there's an immediate hurdle at the current junction. Close around 2335 will add more legs to the rally.
All right. Do we have any queries that we can start taking?
Yes, we do. The first question is from Mr. Naresh Thakur on YouTube Live, and he wants a view, technical and fundamental both, on NBCC and precision camshaft. So, Mr. Prabhakar, let's start with you first. Do you have views on these two stocks, NBCC and precision camshaft?
So, NBCC, there was a news also where they have sold a few properties in the last week from World Trade Center in Delhi. So that adds some positivity. So they are liquidating their unsold inventories in Delhi. So now that creates a lot of cash flow. Their order book is very good, but the execution speed is something which is lacking. If that is improved, I think NBCC will be a very good buy. It depends on the execution. Precision camshaft, we don't track, so I won't be able to comment on that.
Okay. Why don't we also get a technical check-in, Gaurav, on two companies, NBCC as well as precision camshafts. Would you suggest that our viewer, Naresh, can take a fresh entry?
Well, we had recommended NBCC to our clients, but at lower levels, it had a triangle pattern breakout. At the current juncture, one can buy, but one needs to know that the breakouts were at levels of 58, 59. We are talking about levels of 64, 65, which is the current price is trading at. So there will be a deeper stop loss. If one can play with deeper stop loss, then yes, it is good. We have not seen a very strong correction if you compare with how the markets have turned out in last 7-8 trading sessions. It has been more of a stable name. It has shown some amount of outperformance. The volume participation is very robust. The expectations of a major upside cannot be ruled out. But as I said, one will have to play with a deeper stop loss, steep stop loss. If that is not an issue and one can keep a horizon of 12 to 18 months at least, then yes, NBCC can be bought at the current levels. When it comes to precision camshaft, if you look at the weekly charts, we have seen very strong upside already. There was a breakout which happened, but that breakout was also at much lower levels. I wouldn't recommend buying at the current juncture. The breakout was at 260, 195, 200. At levels of 260, again the stop loss will be 20%, 25% lower. Does not make sense to buy at the current level. So avoid precision camshaft. If you have bought already, you can hold, but fresh entry should be avoided. But you can definitely look at NBCC.
Okay. The next company, I must admit, Mr. Prabhakar, I've not heard about this company, and I was looking at it since my viewer messaged me this just a short while back. Rajesh Maheshwari is written in from Indore asking about Black Box Limited. Now, it is a stock with market capitalization of just over 4,000 crore rupees, and according to the website, it says that it's an IT solutions provider, and I haven't honestly been able to go through the list of solutions that it provides. Do you have an idea of this company, and would you be able to give a recommendation? He's been holding, he says, for about 2 decades now.
So I think there should be a lot of name change. So you need to understand it fully. But I've never tracked this company. But as an investor, I will tell you, many companies are they do name change, and they change their business according to the market trend, and this has been happening for last 3 decades. So I'm there for almost 34 years now. I've seen this multiple times. So one has to be very careful if they are changing name on a regular basis and they are changing their business also on a regular basis. It is a suspectable, but the market cap is something surprising. But I have not tracked the company, so I won't be able to comment.
I'm just going through the history of this company. Apparently, this was founded in 1976. Expander Inc. became Black Box. And then 1986, AGC was founded as Tata Telecom. Black Box went public in 1992 on the NASDAQ. So it's got quite a bit of a history. Having said that, if we're talking about a company that has been held for so long in the IT space, which has developed, I think, very rapidly and dramatically over the last 2 decades, is this the best possible holding that you can have? Or would you suggest that he can get out of this company and move to something that you think has more promise?
See, when I've not tracked it, I won't be in a position to comment on it. But if you want a fresh buy, then there are many companies which are doing very good. Newgen is something we like in IT small cap space, where we think very good potential upside is there. Tech Mahindra has a new MD and CEO, and in this con call he said, after he takes over in December. He is saying you have to give him 100 days. 100 days is 3.5 months. So maybe by May of 2024, he will be in a position to revamp all the things. So I think if you are a long-term investor, Tech Mahindra or Newgen would be a better opportunity.
Gaurav, any possibility that you have a view on the charts on Black Box Limited?
Well, it came on my radar this weekend. It was one of the top gainers recently. If you look at the charts, yes, the history is available from 1994, 1995. And the stock gave out a breakout from 10-year consolidation. We witnessed a very strong and rapid rise Currently, it has given a small breakup from bullish flag pattern. So if somebody has bought, one can hold on to. There's no harm in that. And the immediate targets will be around 323, 325, which is the previous swing high. And if you go only by down theory where it's information of higher tops, higher bottom, that also suggests it's in the uptrend. So if the stock is in the uptrend, it should be making a fresh high, which again will be around 320, 325. So one can hold on and one can keep riding it.
Okay. Next up, we have IDFC First Bank, and it came out with its results yesterday. Profit surged 35% to 751 crores, and net interest income also rose to 3,950 crores. However, the stock is down about 3% today. The next question is from Sonu, who's asking, why is IDFC First Bank down after posting such good results? Mr. Prabhakar, what do you think? What's the reason it's down today 3%?
We need to understand, that there has been a huge run-up in the last 1 year. I think the stock has doubled in the last 1 year. So, it is a good bank, but cost-to-income ratio is still 60%. There are PSU bank where cost-to-income ratio is less than 45%. So, still it is not a very efficient bank, if you ask me in that angle. So, they have a vision of 2025 where many boxes they are taking it right. It is not a cheap stock at this point of time. It has given a very good return. So normally after a good return, some profit booking also will emerge.
Fair point. Do you have any view on the charts, or what should you do with IDFC First if you're holding on, Gaurav? Would you suggest holding on at this juncture?
When it comes to holding, definitely one should hold on. So if you look at the charts, we had also recommended IDFC First in terms of technical funda report. We gave around 65, 66 and our targets were 85 around. So we exited, it went towards 95. But if you look at the chart history, again, with the history of 4, 5, 6 years, it has seen a very nice breakout. Why is it falling? Because it's seen a very strong upside. If you look at the RSU and weekly and monthly charts in extremely overbought zone. So we have seen some cooling off happening in the momentum indicators that is pulling the price lower. Also, if you see overall market has been witnessing some profit booking, and that can also be the reason attributed why the stock is correcting. So in my opinion, if somebody has already bought, one can hold on to. I would recommend fresh entry because the breakouts were at 65, 66, currently at 85. Again, the stop loss will be too steep. Any correction towards 70, 72, that can be an interesting level to buy. The risk reward will be favorable and one can buy for long term. And the current action somebody has bought can keep holding. Do not buy fresh.
Okay, fair point. We've got a couple of questions from a viewer on WhatsApp. Rajiv Agarwal, writing in from Bengaluru, asking about IRCTC first. And if time permits, I'll come back to Pfizer. But IRCTC, Mr. Prabhakar, the question is that a lot of the railway-related stocks have rallied quite sharply, but IRCTC has not necessarily participated to that extent. What is the view on the fundamentals, and would you suggest if you're holding to continue to do so? And then, Gaurav, I'll come to you on the technicals. But first, Mr. Prabhakar, on the fundamentals.
We need to understand before any railway stock started to rally, IRCTC has done very good for itself. I think in 21-22 it was one of the best return now, and it gave a best return, and they had a monopoly in railway booking, and even in the food and the rail near which they serve in the train, they are a monopoly, and they have expanded their capacity in rail near even recently. And with Vande Bharat Express and other things, their revenue is going to do very good. So it is a different business where they have a monopoly. Due to the monopoly, already the stock went to a crazy valuation, and from there it is corrected. And so that has given some pause for the stock. It is not that it is out of the game, but we need to understand, for the valuation to justify, time period correction is required. That is what it is going through. At current valuation, it is very comfortable, but to scale up, we need more passenger to travel and more passenger to spend also. And many people don't know that IRCTC, you can book your bus ticket, even your airline ticket, and they have the lowest charges. So there are multiple verticals in IRCTC. So to scale up that, they need to be aggressive in their ad spend, which is not happening. So, being a government, quasi-government organization, they are a bit laggard. Otherwise, it is a very good business model. And if they start to scale up, I think they have less competition in those segments.
Fair point. Not a like-to-like comparison, but Jupiter Wagons in focus today on the back of earnings. It is a stock that has gained 229% in the year-to-date period. And in the meanwhile, IRCTC has only gained about 3% so far this year. Over the last 12 months or so, it is down about 12%. Gaurav, on the charts then, would you suggest that this is a good opportunity that to a certain extent time-wise correction has taken place and that now the prospects are good on the charts?
Since the disclaimer, we also came out with a report in IRCTC when we gave a report on PSE, Nifty PSE index and basket of PSU stocks. It has formed early signs of double bottom formation on weekly charts. However, this is not a stock that I would recommend for trading perspective or for 2 or 3 months. Rather, it is a stock that one can buy if somebody has a horizon of say 15 to 18 months minimum. If you see overall, you'll see with this kind of double bottom formation, our targets what we have otherwise in the report is 1200. When it's not moved up that much, we gave around 610, 650, it's moved up towards 660, 670. But there is a time correction we are seeing at this point in time. The structure still remains positive. We have, like I said, we have been recommending to our clients at the current juncture as well. But like I said, it's not for somebody who wants to trade, but somebody who has a long-term horizon.
All right. Next stock we're talking about is Dream Folks, which is an Indian airport services aggregator. Now, the question is from Mehek. She bought the stock at IPO price of 508 per share. The stock is currently hovering around 482. Is it a good time to buy, to continue holding the stock and even add more, Mr. Prabhakar?
Here, many banks have reduced their usage in airport launches, because people don't spend money on the credit card or debit card, but when it comes to using launches, they use it. So many banks have done restriction that has impacted their revenues. But I think this is a short-term thing. Long-term is good, but I think you can wait for another 6 months before you buy. Let things scale up and then you can buy.
Okay. Chandrasekhar has got a question specifically, Mr. Prabhakar, on Infi. He's got an average, or rather, he's got 29 shares at an average price of 1365, and he plans to hold or accumulate. What, according to you, should the 12-month target be based on the fundamentals?
12 months would be very difficult for Infosys and TCS. So, we need to understand when their time comes, the stock doubles. Yeah. Now, I will tell you in 2019, you take 21, the stock has given multi-bagger return, every IT stock. So IT has its own time. But now with slowdown in Europe and slowdown in US, there it is not time consolidating. So we should not worry too much on that. But once the business starts to pick up in US, then the limit is not there. So if you are 2-3 years investor, you can just hold on to it. The stock can double in 2-3 years.
No, certainly. And I think if the employees start working even 60 hours and not 70 hours, then there'll be some kind of an impact on that. But having said that, on the charts then, Gaurav, what's the view on Infosys?
Well, Alex, first and foremost, being an employee, I would not recommend 60 hours, 70 hours, not good for my health. But if somebody wants to have a portfolio health, then yes, it's a stock to add. I would not recommend in 12 months, but in 18 months, I'm expecting a fresh lifetime high. The stock has been a 20-year uptrend, and we have seen a breakout of 15-year trend line, retest of that. And again, there's some time consolidation happening, as you said. But it's a good stock to add. We have recommended much lower levels when the first correction came towards 1200. That is the time that we had recommended to our clients. Again, the horizon was not trading. I would not recommend any IT stock for that to be traded. Maybe like Persistent or something like that, they can be traded. But beyond that, I don't see likes of Infosys or Tech Mahindra, HCL Tech. I do not see the true potential in the next 2 or 3 months. If we have a horizon of say 18 months, 24 months, then as Prabhakar sir also said that the time of IT is different. You can't expect that the kind of returns that you are expecting should happen in your expected time. It will take its own sweet time. So if somebody has 18 months of horizon, definitely one can buy here also. And if somebody has about one can hold. I am expecting lifetime high in Infosys.
All right. Next up, we have another question from Naresh, and he's talking about a shipbuilding stock, Cochin Shipyard. Now, the stock has won a couple of orders and has seen a run up in the last 6 months. But should he continue to hold the stock? That is the question. Mr. Prabhakar, what is your view on this, Cochin Shipyard?
The kind of order they get from Europe is amazing. So regularly, the green energy ship which they get for inland travel, and the technology is from Europe again, and they are getting consistent order. And if this order starts to scale up, I think it is going to be very good. I like Cochin Shipyard, but again, all defense-related companies have given a good rally. So, and now we have seen a correction. But if you are looking at 2-3 years view, then Cochin Shipyard, even Muscon Dock are good buys. But you have to be doing a systematic investment plan in this stocks.
Okay. What are the charts showing, Gaurav, on Cochin Shipyard? Is it a good time to add it to the portfolio as well?
I would not certainly recommend adding the portfolio. One is to look at how the stock has behaved over the last a few months, if not years. You will see that the stock in the current year itself has moved from 400 to 1,000. So the stock has already become multi-bagger. If you're buying here, say when there's a vertical rally, you don't get proper supports. The supports always tend to be deep. So on that perspective, I would not recommend adding fresh. Probably any declines towards 700, 750 can be utilized again for fresh buying accordingly. If somebody has ability risk, then yes, any level can be bought. But in my opinion, there are many stocks which can give similar kind of returns. There's no point in chasing a stock. If somebody has bought, can definitely hold, but I would not recommend buying fresh.
Okay, fair point. Gentlemen, that brings us to the end of this edition of Ask BQ. Thank you so much for joining in and for answering all the questions that you did. Certainly an insightful session today. And to you viewers, thank you so much for joining in, and hopefully we helped you get answers to all of the questions that you had, stock related, that is. If you've got more questions, then we'll be back tomorrow at the same time, that is 11:30 a.m., and we'll take all of your questions at that time. For now, do stay tuned. Lots more coming up on BQ Prime.